John and Joe, Vitale, American Retirement Advisors, the Gradient Investments Weekly Talking Points for September 15th, 2023. Let's get into stocks. Stocks were slightly lower last week while overseas developed markets advanced. The S&P 500 was down 0.12, the Russell was down 0.2, and the NASDAQ was down 0.37%. Now the international developed markets, which is the EFA, was up 1.67, while the emerging markets added 1.27%. Utilities and consumer discretionaries were the best performing sectors, while technology and industrials were the laggards. Now value stocks outperformed growth stocks, and large caps were best performers by size. We've seen a lot of this go back and forth this year. The small caps are leading the way. Tech, it's all coming back now, but still we're kind of stagnant right now. Fixed income, the likelihood of an interest rate increase from the Fed, which met yesterday, they did not increase. They actually paused. They're not ruling out another rate hike. So still, we're like, come on, we're supposed to see some drops, but no, we still might have one more, but we'll see how that goes. So however, interest rates did rise last week and bond prices fell as investors digested sales and inflation data that may have diminished expectations for a rate cut by the Fed over the coming year. Now yields on the 2-year, 10-year, and 30-year government issues rose 4 to 9 basis points to 5.02, 4.33, and 4.42% respectively. Overseas, the European Central Bank raised its borrowing rate for the 10th consecutive time in an effort to bring down inflation. The central bank raised its key lending rate by 25 basis points as officials cut their growth forecast for the economy. Now, interest rates for the 10-year German bond rose just 7 basis points to 2.67%, as the European Central Bank signaled that this rate hike would be its last for some time. Again, similar to what's happening over here. Hopefully, we'd like to see it come down. But they still say the economy is a little too strong, so they're trying to get it into recession more than anything. Let's talk about commodities. The price of West Texas crude oil rose 2.87% last week to $90.02 per barrel. Falling global inventories amid a tightening market with OPEC Plus and Saudi production cuts driven oil prices higher for 3 consecutive weeks. Additionally, China's latest industrial output report showed faster than expected year-over-year growth in August, although manufacturing growth was modest on a month-over-month basis, although we did have $50 a barrel oil because until the pipeline and all this other stuff was shut down. So let's get into economic data. The consumer price index rose by 0.6% in August, or 3.7% on a year-over-year basis, slightly ahead of the consensus estimate. More than half of the monthly increase in inflation was driven by a recent jump in oil prices. After excluding volatile food and energy prices, the index rose a mere modest 0.3% on a month-over-month basis, in line with expectations, and this core rate annualizes 2.4% based on the last 3 months, closing in on the Fed's 2% goal. However, I don't think so. Things are still a lot higher than 2.4%, so I don't know where they're getting that data. And they always say, oh, this data, then they repeal it the next month and say, oh, we were wrong. So we'll see how this goes. Now, retail food and services sales rose 0.6% in August versus July and 2.5% from a year ago. Total sales in June 2023 through August 23 were up 2.2% from last summer's report, and gasoline stations were down 10.3% from last year, while food services and drinking places were up 8.5%. Let's go into company news. CVS, which is a G50 holding, rose 7.64% on positive comments from the CEO that expectations are high for a government upgrade to its Medicare Advantage PPO plan for next year based on internal data. And the ratings are generally released in October, so we'll see what that says. Netflix, which is a contrarian choice, Core Select and G33 holding, announced that it's not seeing the positive impact on advertising revenues that it had expected from instituting tiers of subscribers based on ads and prices, and shares fell 10.3% for the week. So we've seen that pull back. It was up a little bit ago. The last few months we've seen it actually go up quite a bit, but it's pulling back. That's it. This concludes this week's market update. Thank you so much for being part of the ARA family. If you need to get a hold of us, give us a call at 855-756-5700. Visit us at araadvisorsinc.com. Don't forget to check the YouTube and Facebook, and like us, and make sure that there's anything you need, give us a call, and we'll be making sure we reach out. We'll look forward to seeing you soon. God bless you, and we'll see you next week.